Welcome to this episode of Accounting and Tax Tips, Smart Strategies for Small Business Success, with certified public accountant Tina Moe.
Did you know that if you use your vehicle for business or in your job that you may be entitled to a deduction? This typically does not include your commute to and from work, but any kind of business travel beyond the commute may be eligible for a deduction if you are not reimbursed by your employer. The IRS offers two methods to calculate your deduction, the standard mileage or the actual expense method. And if you qualify for either of these methods, you may want to calculate your deduction both ways prior to choosing your method. Under the standard mileage rate, you're able to take your business miles times the appropriate rate for the year, which for 2015 is 57.5 cents per mile. To choose this rate for a car that you own, you must select this method in the first year the car is available for business. If you choose the standard mileage rate, the IRS requires you to substantiate your expenses for this deduction. This includes a mileage logbook and a third-party service ticket that shows your odometer readings. I recommend getting your car serviced in January and again in December, so you show these odometer readings for the whole year to support the total miles you're claiming. The standard mileage rate for business is based on an annual study of the fixed and variable costs of operating a vehicle, including depreciation, insurance, repairs, tires, maintenance, gas, and oil. The deductible mileage rate for medical and moving purposes is based on the variable costs, so just gas and oil, and the amount you can deduct for charitable use is set by law in case you're wondering how these rates are determined. And just for clarification, a vehicle includes a car, van, pickup, or panel truck. For those of you with a fleet of 4 or more vehicles used simultaneously, the standard mileage method is not available to you. The standard mileage method is also not available to you if you have previously claimed bonus depreciation, Section 179 expense deduction, or if you are a rural mail carrier who has received a reimbursement. Under the actual expense method, you may be able to take a portion or all of your repairs and maintenance, tires, fuel, oil, and depreciation. The amount of the deduction is determined by your business use. For instance, if you are a sales rep and you drove your vehicle for 20,000 miles in total, and 8,000 of those miles were for personal use and the other 12,000 were for business use, you can only deduct 60% of your expenses. For employer-provided vehicles, you may deduct unreimbursed expenses, but you may not be able to deduct the standard mileage deduction. Be sure to check with a qualified tax professional before deducting auto expenses on your tax return. I hope this information was helpful, and if you have a tax question, email it to me at tina@actservices-inc.com, and I'll make it the topic of a future show. For more information, visit my website at www.actservices-inc.com.
Thank you for watching this episode of Accounting and Tax Tips with Tina Moe. For more great information, visit Tina's website at www.actservices-inc.com. Also browse the other shows found right here at Indie Biz TV Shows.